Hello traders, Sid here with another weekly watch list video. And before jumping into this week's watch list, let's take a look at what happened in the market this week. I'm recording this video on Saturday, that's why I'm saying this week. Prepared few notes regarding whatever happened in the market, so I just want to give it to you and it will provide more information related to everything that happened in this week. So stocks fell as treasury yields rose on speculation that the Federal Reserve will raise interest rate aggressively to combat high inflation. Now, the expiration of the options on Thursday could have amplified market volatility and market movements. Now, the threat of higher borrowing cost sank the rate-sensitive technology firm, which led to S&P 500 losses. 10-year US Treasury yield topped 2.8% and the dollar rose after New York Fed President Williams said that this speeding up the pace of tightening to include 0.5 percentage point hike is a reasonable option. Now, the rise in Treasury yield marked a reversal from the previous 2 days when traders reduced expectations of Fed tightening following the evidence that the inflation was set to moderate. Now that supports faded in pre-holiday trading as data showed import prices rose more than economics expected. Now the United States central banks face a delicate balancing act in tightening to combat inflation without suffocating the economy's recovery. Now the consumer sentiment in the United States unexpectedly rose to a 3-month high in early April and ongoing to optimism about the job growth and the wage expectations. Now the separate data showed that the retail sales increased in March, aided by the increase in gas station receipts that obscure the mixed result in other major spending categories. Initial jobless claims increased slightly last week but remained historically low. Now let's move on to this week's watch list, starting with the Nasdaq. Now the Nasdaq has this cup and handle formation, and I think it's a bullish, but if it failed, then the quick retest of 1300 will play out nicely. The overall market provides some mixed signals and the rotation from the one sector to another, and is still in transition, which provides market volatility and some sideways and a choppy action. But overall, we will slowly get that bullish momentum as we are heading towards the April end. And I'm bullish because, as you guys can see here, we have this nice cup formation followed by the handle, and I think this is bullish, but we need to see that curl up towards the upside, and basically we need to break through this 14,458 level. Once we break through that, then we need to see if we can break this cup level resistance, which is at 15,280. Moving on to S&P 500. As per chart, S&P 500 has to hold 4389 level, which we hold nicely for the last 3 times. Now, if it couldn't find any buyers, then it quickly dropped to 4300. And if we take a look at the bigger picture, then you can see the beautiful cup and handle formation similar to Nasdaq on a 30-minute time frame. Moving on to VIX. Now VIX is a little bit more interesting because similar to Nasdaq and S&P 500, it is also showing some bullishness. Now, since VIX is inversely correlated with SPY and Nasdaq, if we get another leg high, or if VIX breaks through this 23-24 level of resistance, then we can see the pullback on Nasdaq and S&P 500, and basically that will fail my bullish thesis of the overall market, and we will see more sell-off in the market. Now the first stock in my watch list is ABBV. Now the beginning tech sector, all the strength is going towards the retail and energy healthcare stocks, and ABBV is a prime example of that. It's a recent move from the high of 175 to the low of 158 was quite amazing. From its low 158 we got a nice bounce. Now I'm not sure if that's a dead cat bounce or we will see the continuation from its current price towards the upside, but if we couldn't get that continuation, then we need to watch for 158 and 153 level, and I think that will be a proper pullback, since after this huge rally it needs some time to catch its breath before making another leg high towards 168 and 170. Now the levels to watch for are on the upside are 165.18 and 168.05, and on the downside the support levels to watch for are 158.13 and 153.95. The next one is Airbnb. Airbnb has halted all its operation in Russia and Belarus, and the company has cancelled reservation in both countries made on or after Monday. Now the guest will not be able to make a new reservation in either country. Still, with the lifting COVID restriction, Airbnb can recover losses that they are going to have by banning Russia and Belarus from its operation from the US economy, because COVID restrictions are getting less and less, and so more people can travel, go on vacations, and that's going to provide more revenue to Airbnb. Now, in what percent US economy can, or revenue from other countries can subsidize for the losses that they are going to take from halting their operation in Russia and Belarus, we need to check their next earning report. But at this point, Airbnb is still making a nice small inverted cup at the top, and this rounding action shows bearishness. So for the levels to watch for are 173.46, 176.22, and for the support 169.12 and 167.53. so definitely I would like to play it on the downside for a while till it reach to this resistance level of this channel, and at that point we just need to watch how it reacts, whether it breaks down. If it breaks down, then it will again come back to this 157 level. Otherwise it can bounce back again towards 160, 170 level again. Next one is Caterpillar. Now the shares of Caterpillar gained 4.37% on Thursday. That was a monster move, and Caterpillar could face a margin headwinds due to the rise in steel and commodity prices, but the higher commodity and energy prices should benefit certain sales, helping offset the impact of the higher input cost. Now the higher natural gas prices and the need to boost gas import to Europe is supporting LNG investment in the US and Europe, while an increase in LNG project should lead to more demand for the company's earth moving equipment, so is kind of bullish for Caterpillar. Now with such a parabolic move, I am expecting a pullback and retest of 224 level before making another leg high. If that happens, then that would confirm its bullish trend towards its all-time high at 250. Now are the levels to watch for on the upside 231.81, and the next level is 235.82, and I marked them over here. And for the downside, the support levels are 221.21 and 214.61. Also, if it reached to 214, then at that point it will fill this gap. Next one is Costco. On a technical term, it has that head and shoulder formation, which is a little bit concerning, and it might retest this 586, 582 level. At that point, it can come close to this neckline, and if we want to see the exact price, I think it can come back down to 583 to complete this head and shoulder before making another leg high. Now the levels to watch for are 595.43 on the upside, and the next one is 600.47, and on the downside 586.20 and 582.01 for support. Next one is John Deere. John Deere or DE is in a beautiful megaphone formation and certainly halted at the resistance of this megaphone channel, or upper resistance of this megaphone. I can see it might retest 429, 423 if it couldn't make another leg high and break through this resistance level of this megaphone. So levels to watch for are 446.18 and 446.46 on the upside. And for the support levels, we need to watch for 429.98 and 423.22. Next one is FedEx. With the missed earning expectation, FedEx dropped like a stone in the water, and with the dead cat bounce from the recent low of 198, it is forming this nice rising wedge, which is bearish sign in terms of technical analysis, and I would like to see it retest and hold that 200 level. Levels to watch for are the 207.84 and the 209.95 on the upside. On the downside, 204.29 and 202.85 as a support. Next one is MasterCard. Now the MasterCard is forming nice head and shoulder inside this megaphone, and if you look closely, then it also has a double top at 361 level, so it kind of like looking bearish at this moment. I can see that it can come down to 353, 350, and at that point it will fill this tiny gap as well, which is from 357 to 356. The levels to watch for on the upside, 361.56 and 365.29, and for the support we can have these two levels, which is at 355.48 and 353.13. Next one is Nike. After giving a parabolic move, Nike is forming nice rising wedge, which provides enough evidence for its upcoming bearish move towards 130, followed by a gap fill between 128 127 and retest of 126 level, which it held nicely so far. So levels to watch for the Nike are 135.60 on the upside and 137.73, and for support 130.11, and the next one is 126.75. Next one is Nucor. Now minerals, mining, precious metal stocks are in boom, and Nucor gave us a nice parabolic breakout from its previous falling wedge, and it's not done yet. It is again forming this gapped up and falling wedge type formation over here at the top. So let me mark this as a gap to fill, and considering its current formation with top heavy, I can see it's moved towards 170, which is going to be all-time high. But before doing that, we might see a pullback towards 163 or possibly 160 level. Now the levels to watch for are 166.84 on the upside and 168.37 on, and for the support side we have 163.79 and 162.27. The next one is NVAX. Similar to FedEx, NVAX is also having this huge sell-off and then flag formation, which is kind of like a bearish, it's a bearish pennant. So their earnings are coming up on 10th May, and technical analysis also indicates this bearishness and gave us a hint of its possible move towards lower 50 level. But the level to watch for are 61.87 and 65.19 for the upside, and for the downside we have 56.74 and 54.93 as a support. Next one is Snow. With the overall weakness in the tech sector, Snow is also looking bearish. There is no doubt about that, and it has this falling wedge formation, which is also a bearish pennant, huge sell-off, and then again this tight bearish pennant. It indicates its further move towards the downside. So the levels to watch for are 209.57 and 220.50 on the upside, and if we reach to this level, then we have this gap to fill between 221 to 225, and on the downside we have 193.13 and 187.62, and if we couldn't hold this level 187.62 level, then it can probably retest 182 180 level and might fill this gap before making any further moves towards down or the upside. We need to watch out for that one as well. And the last one is Target. Now the consumer staples and consumer discretionary sector is booming. That does not mean that each stock has to go up, and currently the market is respecting all the technical analysis and fundamentals. Our Target is a good example of that, as it's slowly grinding its way up while forming this rising wedge, which is kind of like a bearish in its bullish move. And I think it might come down to as low as 230, which can be considered as a healthy pullback. So the levels to watch for are 239.22 on the upside and 241.25, and as a support 234.14 and 231.09. so that's it for this video, guys. I covered most of the stock with their technical analysis, provided support and resistance level, so watch out for those things. Also, I post all of this detailed chart with options activity details on my Patreon in the form of PDF document. So if you guys are interested, head over to the Patreon and join Patreon community for $1 a month. So thank you for watching, and see you again next week with another watch list video.